So thanks everybody for being here and welcome. The panel today is about ESG data and a little bit of trust. I think we had a discussion this morning. We heard a lot about the situation in data, and all of the presentations and the interviews were basically talking about how difficult it is to achieve clarity, transparency on data. That's why we thought it might make sense to actually ask for the trust in the data for ESG data. So if you take a look at what the situation is like over the last couple of years, we basically see that the financial services sector has a major responsibility in contributing to the status of ESG, and we also see a lot of regulatory environmental change. Investors and consumers are also increasingly looking at, is actually a business model sustainable? Is it compliant with the ESG criteria that have been published by the regulators? We had even large investment companies like Allianz proposing that by the end of 2030 they would have all of their investments ESG compliant. Looking at the quality of data that we see today, there's obviously a major challenge, right? How do you actually prove that something can be or is compliant and is sustainable? What we did at EY, we basically did a study on ESG fintechs in the last 6 months. We found, and we looked at 16 European countries, basically, in Western European countries. And we found 300 startups that focus on what they call ESG, all very different setups. But what was very interesting is that about a third of them, right, 90 startups plus even, are looking at data as a problem. So as a business model in the sense of providing data, as a business model of leveraging data and providing analysis on the back of that. So we found that was quite exciting. And it's also showcasing this is a very up-to-date area. So of the 300 fintechs, about 170 have been founded in the last 3 years. Very young, very early stage. This again poses the question of trust. So can you trust into a business model that's only a year old? Interesting question. So going forward, if you take a look at the different amounts of data that are out there, so we see that there's basically a vast amount of very complex data, very much interrelated. We even have very different areas. So if you take a look at Lieferkettengesetz or the supply chain law, which is basically creating, again, data sets. We have the climate action parts, which create data sets. All of them are super complex, interrelated, very difficult to really find the clear path to understanding the data sets and what the impact is. Of course, if you go top down, we will see listed companies being heavily analyzed by the big data giants that are out there, like Thomson Reuters and so on. So there will be data available for these companies, right? But if you take a step further and you take a look at what we call SMEs or Mittelstand in Germany, big question mark. How will they contribute to transparency? And that is of course, for financial services companies, a big problem. Because they have to rely on the data, they have to collect the data, they have to prove the data. I mean, if you take a look at what happened with greenwashing scandals over the last only 6 months, if you take a look at some of the cases that were in the press, which actually also caused a lot of impact on the management of those companies, it's obviously a big problem that needs to be solved somehow. But again, we are not at that point to have an answer for this right now. So that's why we thought it makes sense to have different people in this panel, and we try to have someone from the banking environment, right? Who's Juergen will in a second introduce himself. He's the head of strategy and ESG at ING in Germany. So a bank that clearly has proposed very aggressive targets in becoming compliant. Green asset ratio being one of the major drivers for Juergen going forward. We then have Monika Martinsson from Deedster, to the left or to the right-hand side. Deedster is a company that works on climate action programs with financial services companies and basically supports them in setting up these programs. We also have Tim from Xilva. Tim the company is basically a global marketplace for early stage investments into forest rebuilding. So something that is also very interesting, but also has a clear problem if it turns out that the investment you're doing is actually creating a soy field somewhere in Brazil rather than investing into forests. So trusting the data is a major point here as well. And then finally, we have Matthias from ESG Book. So Matthias is also a long-term player here in the Frankfurt ecosystem. Many of you will know him already. ESG Book is a company that focuses on creating ESG data and providing it back to the industry as a source of trust. So just to open up the discussion, maybe each of you just introduces yourself a little bit. Monika, do you want to start?
Yes, love to. So, Monika Martinsson, we founded one of the founders of Deedster, a Swedish startup. We were founded in 2016, and then, I need a mic.
Oh, sorry. That's my fault. Hello, operating.
So, do you hear me now?
Yeah, it's much better.
Yeah. So, Monika Martinsson, I'm one of the founders of Deedster. We founded Deedster in 2016, so a bit older than the companies that you surveyed. And we founded it with a mission to enable the shift to sustainable lifestyles. So what we do is that we have tools and data that we use to measure, explain, and reduce carbon emissions of individuals and companies. So our customers are corporates, banks, and FinTechs who see a need and have a wish to engage their employees or their retail bank customers to act for the climate. And this is actually a sector that you may not know, but 70% of global emissions comes from private consumption. So if we dare to step into this, our lifestyle habits and our spending behaviors, there's a lot we can do for the climate issue just by doing some changes and transformations. So I won't talk more about that now, but to give you an idea of how this looks on the bank platform, what we do is that we embed sustainability on the bank platform, and we use gamification to nudge individuals into learning more and creating awareness about climate change, and then to invite them to act for the climate through their spending and behaviors. So that's short about me.
Great, thank you, Monika. Could you just pass on? So, Tim, from your end, do you want to explain your business model a little bit and also a little bit talk about the trust that is relevant for your business model specifically?
You explained it very nicely, so I can actually... what we are doing is, I'm Tim, the CEO and co-founder of Xilva, and what we do is we enable investments in sustainable forests. So basically we take the starting hypothesis is that forests are a great climate solution, they're very scalable, they have a great benefit there, they are proven as a technology, so it's not that you have to invent something, and they're also quite cost efficient compared to other climate solutions. And that, to enable that as an asset class and as a place where people can invest with confidence, that needs trust and data, and that is the core basically of our marketplace. With our own grading methodology for forests, we say we can tell institutional investors, basically, is this a good project? Will it achieve the climate benefits it promises? Will it achieve the returns? Because there are also returns to be had there. So it's not a general view on ESG across a whole lot of industries, but it's really in this very specific asset class that we are trying to make accessible, investable, and then perform for the climate.
Very good. Thank you. Juergen, on your website, you provide sustainability, financial health, and other things as core values that you want to foster with sustainability. Can you explain a little bit more from your point of view as a bank what trust and data is required to build on that?
Sure, pleasure to do so. So maybe first I introduce myself, Juergen, running actually strategy and sustainability for ING in Germany. And the reason why we combined actually strategy and sustainability simply for one reason, because we think sustainability is actually changing the whole bank, the way how we do operations, how we interact with clients, the business we do, and the business we support in the transition towards a net zero economy. And the reason why we put on the website and basically as our key priorities is quite a broad scope on sustainability. First is climate. I think that's the most urgent, pressing topic. That's basically one of the areas we can have most impact as a bank in order to drive actually transition. The second topic is, of course, financial health, because at the end, I mean, there's also a little bit I think banks need to play a stronger role in supporting financial health. It means preventing people from getting too much into debt, but also helping them to have actually enough liquidity, but also enough buffer for the long-term savings. So that's one of the second areas. And I think the third one is governance. I think that comes a little bit natural with the banks. So we need to focus, and we want to focus on KYC, AML, and all these topics in order to be regulatory compliant. I think in history there has been a lot of, let's say, bad examples. So hopefully we can prove to be one of the better ones. But so that's basically driving the operations, but also the purpose of us and also the aims. Why is data so important? Of course, we need data. We need trustful data in order to steer and see where we are. And I think we come to that in a couple more minutes.
Absolutely. Okay, Matthias.
Yeah, very happy to introduce myself. So I'm Matthias, representing ESG Book. I'm leading our global solutions business and also representing the company in the DACH region. For those of you that don't know ESG Book, we are an ESG data analytics and technology provider. That basically means we collect sustainability data for companies and make it accessible to investors, to the financial community. We started in the area of the listed companies, so stock market traded firms, roughly 10,000 that we cover worldwide. But I think the big challenge now, and Chris was already mentioning that during his intro statement, is how can we expand into the German Mittelstand, into all the non-listed sphere? Because, I mean, Germany is very much a bank-financed economy rather than a capital markets-driven economy. And with the upcoming legislation, CSRD, taxonomy and the likes, all those companies also need to disclose sustainability information for the very first time. And they also want to understand how they perform relative to their peers. So we are basically serving both sides, the financial institutions that want to have a view on the portfolio, on the credit exposures and the likes, but also the corporates themselves, and help them improve on their sustainability journey.
Great, thank you, Matthias. And we structure the discussion a little bit along the lines of regulation, challenges, and also opportunities. So starting out with the regulation and just sticking with you, Matthias. I mean, what from your point of view, and you are talking to the banks, you're talking to Mittelstand, where are we in the situation right now, looking at CSRD coming up as a major topic that needs to be reported against? And by the way, we spoke to a number of banks, and I think the range of answers is very, very broad, right? So you hear answers like, yeah, we have it all under control, everything's going to be fine. And I think the other extreme was, oh, nobody's going to ever do it anyway, so we're not focusing on it, right? So this is a very broad set of probable answers to a question that regulation clearly put to the table of every single financial institution, at least in Europe, right? So from your point of view, how far have you come with your discussions, both on the Mittelstand side as well as on the banking side? What's your impression how they addressed it?
I think overall we are clearly in the very early days of the sustainability journey, and I think that holds true for both sides, for the financial institutions and for the corporates. And I think everybody complains about regulation, but regulation is very important as a catalyst for change, because the first reaction is always, okay, we have to comply with regulation. That's how all the discussions basically started, both on the banking side and also on the corporate side. And then over time, they also realized that it can be a competitive edge. They can really differentiate from their peers by doing better, by launching new products, generating new revenue streams, or also just credibly showing to their clients that they have improved against certain KPIs, be it on the environmental or the social side. So yeah, the initial discussions are always very much regulatory focused, I would say. And in that regard, I think everybody now realized that 24 is not far away anymore. We are already in 23, so companies have to act now. There's definitely big momentum since, I would say, after the summer break last year. So corporates realized that they have to prepare in order to be able to report and disclose in 24. And similarly also for taxonomy and the other initiatives that are just ahead of us. But as I said, the proper business discussion, so what does it mean for our overall business mix? How can we, or how should we provide certain services or products in the future? That typically follows with a time lag, and those discussions are mainly still to come.
Great. Moving on to Juergen. So you're being head of sustainability in ING, obviously a big task ahead of you. What have you seen so far within ING and in the banking market? What's your experience? What are the challenges that you're coming to? And also, I mean, looking at something like green asset ratio, which is a driving force with ING being a major player in the mortgage sector in Germany. There is also a specific challenge, obviously, for you on that end.
Absolutely true. And I think first, there's indeed regulatory requirements that are driving the change. But I think there's one more thing to mention. That's actually the Net Zero Banking Alliance, for example. That means actually we're committed to steering our loan portfolio according to a 1.5-degree path. And I think here comes actually the biggest challenge also related to data. Christopher was mentioning the mortgage portfolio. I mean, we clearly know that in Germany, for example, we are well above the CO2 budget if it comes to real estate or housing, which means we need to drive, actually, first we need to create transparency for us, knowing what's in our loan portfolio. Second, we need to create transparency on client side in order to let them know and make them aware where they stand. And then third step is actually help them to motivate them to do the retrofitting in order to improve actually the emission, which helps us also driving down our loan portfolio emission. And there's a lot of hurdles clients need to overcome. And there's big challenges for us as a bank, but there's also big opportunities in that area. But it all starts actually with sufficient data and adequate data.
Yeah, interesting. Thank you, Juergen, from the banking point of view. Now, moving on to Tim, and while we are talking a lot about CSRD reporting standards, basically limiting also the investment risks from the investment side, you've moved ahead with your business model. I mean, and we see a lot of, if you input impact investing into Google, I think the searches have really surged over the last couple of months. How do you, as being a company that does impact investing, provide the trust and the reliability of the investments that you are providing?
And that's exactly what we're doing. So basically, we're going beyond selecting out of a big asset universe the ones that perform well on ESG criteria, but we go proactively to the ones that provide that kind of impact by for example, creating a sustainable forest in Peru or in Indonesia. So that is obviously needs much more trust and much more information, not just on sort of a paper-based analysis, but really go in there. Looking at the interventions really needs technical expertise there. And then we have to aggregate it in a way that is understandable and acceptable to investors. That's a lot of translation work that I always say we are translators, basically, between the foresters and the sustainable managers of the forests and the financial community. But it's actually very much required. And it's driven, interestingly enough, we get a lot of requests from traditional asset managers, and they get requests from their clients, because their clients felt a bit, I want to use a polite word here, but they felt a bit maybe not treated so well by many traditional asset managers. You mentioned the scanners at the beginning, where you say basically you take a normal index fund, you slash out casinos and weapons. Weapons are good now again. So you slash out the bad ones, and then you sell it as a green fund for 60 basis points more, right? And that doesn't work, and that doesn't create impact, that doesn't create benefit for society, and clients are realizing it, right? So they go to their bank and say, give me a product that is really providing impact, and that is driving our business. But of course it comes with a lot of responsibility, right? Because the clients want real impact, and we have to prove that the projects have that real impact. So that's puts a big onus on us to provide the right data, the right confidence that they can actually invest with confidence into those impact in this very specific impact area of forests.
Great, thank you, Tim. Moving on to Monika. So, I mean, coming from Sweden, you're kind of pulling together global sources on data, local sources of data. I think, again, we heard this morning the patchwork as being the current situation on the data side, which basically means there is no uniform standards. There's nothing that we can rely on which is globally harmonized. How do you deal with that?
Yeah. So we come from the consumption perspective here. So when we talk about the carbon emission, we started out counting it on nations, and now we're talking about corporates and maybe investments. But we're looking at from a consumer perspective, the products and the services. What are the actual emissions on them? So here we are far from standards and regulation. That's for sure. But there are data, and there are methodologies that are renowned and used in the research community, and that's what we're looking at, and that's what we're using. And it's actually amazing data. It's of course difficult to maintain those kind of, because it's a lot of data you can imagine on products and services. But there is data, and maybe that's our advantage, because we don't have to scale maybe to the level that ING have to, but we can be very selective in how we do it. So we can develop our own methodology, and we are working with customers and clients who are really front runners, right? They're not waiting for regulation, they're acting. And they are themselves have an opinion about how this should be done. And then we are fully transparent with our algorithms and our methodology. And then they are fine with that. One of our biggest clients is Swiss Re, and they are of course super, super careful about what data they are presenting, even if it's together with us. So that's how we're acting on it. Then of course it would help with standards. I think we're going to agree on that, and I can be the first to say that having standards in an industry, if we could point to our competitors and we would show the same numbers, that would be amazing, because it does create trust in this sector, and we all need that trust going forward, and we also want to scale, and then we need to scale with trust. So that's going to be important also for the consumption perspective. But we want the data and the standards to be really good and really bold. We don't want to have the global averages, something that's easy to do, easy to find. We want to have the standards that it's actually taking us towards the global goals, because that's what we want to achieve. We heard that this morning, that there's about regulations. It's not about regulating, right? It's about achieving something, achieving the global goals. So we're also looking into standards that are really bold and really getting us there.
Yeah, thank you, Monika. And standards is, I think, what we're all looking for, even if they're not fully in place at this stage for measuring it. Just from a perspective of someone that does certifications normally in that environment, it's very difficult for us today to certify a model according to the data processed, because it would basically mean we would have to trust and track all of the data sources that are available inputting into a model. And most of the times they're not single source, they're multiple source, which makes it incredibly difficult to issue a certification on that. So what we do currently, we issue certificates on the process of how they are compiled, right? Because we can't do it according to the standards that are not there, right? So a very difficult situation also for an external trust.
I think the standards are good and are needed ultimately, obviously. We all want to have that, but to start with having impact, you can't start with defining the standards, because then you're wasting another 5 years in defining the standard. We need action, right? We need action, we need impact, and we need money to flow into that, and that's why we can't wait for the standards to be fully standardized.
Exactly. I think yes, my point.
Yeah. Very good. Thank you.
So great pitch, Tim. So if anybody wants to invest into a trustworthy building of data sources, Tim is for sure the way to go. From your point of view, I mean, as a bank, again, Juergen, how do you assess trustworthiness of ESG data or business models or investments that you're starting to invest into? What is the process right now?
Well, I think there's a couple of things we can do. I mean, we've discussed about the data sources, different data sources. That validation is very difficult, no doubt. I think what we can do as a bank, and that's what we do, is do first sense checks. So we really look at the data and see if they make sense at all, or if we can detect some patterns that are, let's say, unnormal, unexpected. Second thing, and that goes along a little bit with the sense check, is actually peer group comparisons. So we also have different companies from the same industry that help us to compare if there's any outliers or things that look strange to us. And third is education, training of our people, helping them to understand the data and what is reasonable and what is not reasonable. And I think the other point is that goes a little bit into avoidance of greenwashing in that area, is to be really transparent on what we know, what we don't know, and also on what we promise and what we can promise. I think that's, to me, the most decisive part. The other is, as I said, we want to have more standards, common data sources, and also, I would say, also electronic transfer of data or sources from which we can deduct data in an electronic way. That's also helping us in order to avoid actually misunderstanding of data, misallocation of data, or even mistakes in data transfers.
Yeah. And sometimes some of the data that you already own, like a bank owns a lot of data, but they may not use it to a certain degree. So if you take a look at, again, the mortgage example, where you have probably for a lot of the buildings that have been built from a private real estate as well as commercial real estate over the last 5 to 7 years, you will have energy certificates issued, right? Probably not every bank is using that today, but you could start by doing it at least and make the portfolios more and more green over time. Back to you, Tim, because you basically were pitching the method and investing right now. You have a grading system called Xilva Grade, where you basically have an investment horizon covering the next 25 to 30 years on lifespan of a tree, maybe longer, right? So what's your view and how do you do that?
Well, basically, we measure the impact. That's the core of the methodology, and that covers the impact. That covers project robustness, which is, of course, important. We are not talking listed companies there, so you have to really look at the team. You have to understand how the project is set up, whether it has the land rights, etc. You have to measure permanence. That is the one challenge to forests, obviously, right? It's not a permanent thing. It's very, very cost efficient, but not permanent by design. Then we have ESG criteria in the project itself, so we have to make sure that it has all the license to operate in the country, and we look at future value, at the potential to scale. That is basically Xilva Grade in 1 minute, and yeah, that is how we enable investment with confidence in this asset class, and we see a lot of demand for that from impact investors, also related to banks, and also from corporates and from DFIs as a specific category of impact investors.
So how do you ensure that the investments you're doing are basically according to the purpose that was originally published? Do you do site inspections? How do you deal with that?
Yes, we do that as well. In some cases, we rely on the certifiers, so we don't want to be the 5th person who flies there, because also creates some impact rather on the negative side. But of course, especially for early stage, we actually go there. Yeah.
Okay, very good. Matthias, from your point of view, completely different probably area of interest versus what Tim provides. But how do you ensure quality and authenticity of the data that you're collecting specifically on the SME side?
Yeah, maybe a couple of answers to that. First of all, I think in terms of what the consumers of our data should do, it's important not just to look at the aggregated score itself, because I think there's no point in just overweighting a company which has an ESG score of 60 over another one that has a score of 59. But you really need to drill down and say what are the respective strengths and weaknesses. And our model, for example, allows you to drill down from the most or the highest aggregated level to the individual raw data point, and that's on average 400 data points per company. To your exact question with regards to the data collection and how we ensure that the data is correct, there are two approaches. I mean, historically for the listed companies, what we did and also what most of our competitors do is we take the published sustainability reports of the companies from their website. We have our analysts sitting in Delhi in India, just browsing through the documents, finding the right data point at the bottom of page 26 and then putting it in an Excel sheet. And obviously we have checks and balances, we have training, education of our people, we have 4 Eyes principle and the likes. I think that's the best you can do outside in. Going forward and also to build the bridge to the private company world, I think we kind of need to flip the process. So ESG Book as a platform basically invites the corporates themselves to come on our platform, set up their own company profile and disclose their sustainability information and keep their profile updated at any point in time. Because I think for some information once per year, as you have it in a sustainability report, is perfectly fine. Other metrics will change every month or on a quarterly basis or even on a daily basis. So we want to put the responsibility a little bit back into the hands of the corporates, which at the same time is also a big opportunity because they can present themselves to their investors, to their clients, to their insurers and the likes. And then obviously, I mean, self-disclosure is one thing, yeah? If I ask you what were your emissions last year and you say 259, I can say, okay, Chris is probably a trustworthy guy, but I can also double check. So our platform allows to...
Fingers crossed.
Yeah, indeed, you can never be sure.
You never know.
You never know. So we say, A, you can upload a proof document, for example, the bill from your electricity provider or the sustainability policy, so that investors or any interested third party can really look into the underlying document. Plus, and I think that's a big opportunity for you guys and your competitors, I also see parallels to the auditing of financial information. We will see exactly the same also when it comes to sustainability data. Just have a stamp from an auditor that says, okay, we have checked a sample of all the data and we can assure that it's correct.
Yeah, we are trying to gear up again. Standards are a problem, but we've touched on that. Talking about platforms, Monika, you basically have a SaaS platform, which is a great selling argument for investors, of course. But how do you basically put together all of the different components of that platform? Was there some key challenges implementing it? How do you get along with that?
Yeah, there are many key challenges in that, of course, and I think as we discussed before, just finding the different data sources that are out there and creating our own methodology that is auditable whenever the auditors come, that has been a major part of what we've done. I'd also say that equally big effort and equally big challenge is what we're aiming at here is to reach people and to make them understand what to do. Actually, the gamification aspects here and the nudging aspects and inviting people such as you and such as me to actually think about our habits and spending. So we spend a lot of time. There's also a lot of data around that, social sciences around behavioral change and gamification. But what we see now, maybe as the challenge is going forward, is exactly this that we're talking about now, that the data, I mean, we are confident in our model, and we currently can't audit it because there are no standards, but we can audit it, as you said, by methodology. But what we experience is maybe that the banking community is very hesitant in acting on the data that we have because it's not standardized. And to that point that we're making, the point here isn't to be audited, the point isn't to have standardized numbers, it is to act. And there's a lot of knowledge out there, what we're going to do and what we don't have to do. So since the knowledge is there, we have the data, we have the research sources, we can still act. And maybe that's what I would to propose to the banking community here in front of me, that be a bit more bold in taking on data points that aren't audited. I think there's room for that because we can still have a rationale that we want to achieve change and we want to achieve climate action, and that's good enough. So maybe have different levels of communication. Can we talk about what's audited and what's true and what's scientifically certified in the kind of normal space, and then at the same time talk about what's true and what the knowledge is? We know so much more, and can we then dare to act also on that?
Which brings us to the opportunities, right? So, of course, there is still a lot of challenges. We heard that from all of the participants on the panel. But of course, creating trust into data that is becoming available provides also significant opportunities. I mean, one of the opportunities we kind of outlined earlier on, there's 80 providers of data, even in the startup segment only. If you add the professional ones, becoming probably far beyond the 100. Is there room for consolidation? Matthias, what do you think?
Well, probably there is. It's always the question how quickly that will happen or not, which I think is also a result of the financing environment, and also the question how quickly some global standards will emerge or not. But I think for providers to succeed, the question will really be how good is the quality of the data that you can provide. I mean, that sounds very trivial, but I mean, as I said, investors want to use ESG information for taking portfolio decisions. Banks want to use it for managing their credit portfolios, not just to tick the box for the regulator, but really steer it to deliver against the net zero pledges, but also to earn money, to avoid default of risks and credits and the likes. And I mean, in the end, the proof will always be in the pudding. So, I mean, ex ante, you can't really say which data is better or worse. So I think in the meantime, the best that ESG providers like us can do is to be as transparent as possible and really explain to our clients, to the consumers of our data, how the data has been sourced. I think it's also as important to distinguish clearly between actual data and estimated data. There's a lot of confusion going on. And I think for the meantime, we also need estimations and proxies because we don't have all the actual information available. But some players are just mixing those two, and it's not always entirely clear what is estimated data and what is actual data. So I think it's very much about transparency, and the consolidation will come at some point, I trust.
So if you take a look at the different models that are out there, the business models, also the ways data are presented and tracked, what is good and what is bad and what is ugly? I mean, from that point, the level of trust, right? What would you expect from a company that is supposed to be a superior provider of data in the ESG environment? That's you.
That's a question to me? Well, I mean, I would always pick our own data sets. I mean, I'm a bit biased, so I'm not sure.
But why are you trusting it?
Yeah, because, I mean, as I already said, I think I would, as a consumer of ESG information, but also financial information, I would want to understand where the data is coming from, how it has been sourced, how it has been validated. Plus, then I want to take my own conclusion. So I don't want anybody to tell me this is how you need to think about sustainability, or this is how you need to weight several factors. I would rather want to look at high quality raw data and then have my own model, have my own assumptions, my own convictions applied, and use that as a basis for taking my informed investment or lending decisions.
Okay, thanks. Juergen, we heard this morning that a competitive bank employed about 100 people in the data environment, only for ESG data, right? That's obviously a significant amount of investment. How does ING see that going forward? And what's the direction that you think ESG data transparency will take over the next couple of years?
I think transparency, I think it's as Matthias said, I think we need to understand what are estimated data, what are real data, what the sources are. And then I think the other step is really use the data for meaningful decisions. And I think from my perspective, it needs to be translated at the end into financial data. So risk associated with a certain climate or environmental data, but also the way how we actually business models can evolve in the loan portfolio, but also potential clients giving the sustainable data. And it's all about translating that into really financial data.
Okay, thank you. Tim, from your point of view, what does it take to really foster or enable the expected growth potential we see in impact investing?
Well, I think you need the trust in data, and you need maybe a new investment universe there, so that you go beyond the traditional listed investments and say, okay, I make a little ESG risk assessment and cross out the ones that don't fit, but really enable new ones that actually have a positive potential, that enable action, climate action, and that still requires proper due diligence. So you have people who claim they make a positive contribution and they don't, right? That exists. But really look at the scaling potential, at the regenerative potential of these projects, and try to find the ones that actually have the most bang for the buck, if you wish, in terms of climate action, right? And that is what your clients want. Your clients want to have impact. They don't just want to avoid the worst. They want to invest in the best, right? And that, if you go that route, then I think you have a very captive audience among your clients who want this. And if you can credibly provide these products, that is actually a very good business proposition to have. Just positively enable climate action with your products.
Great, thank you. Monika, for you, the question. We talked about standards already. We have in the banking space, we have certain standardization bodies like the Basel Committee. Everybody fears and hates it, and at the same time loves it, because it creates stability and transparency. What do you think for the area of ESG data? Should there be a global standardization body, something like a rule setter? And if yes, who could that be?
Yes, there should. there's a simple answer to that. That would be nice with standards, but. And of course, auditors would I mean, have a body of responsibility there, but maybe controversial here having EY, but it's not really the standards that we're looking for. We're looking for climate action, so to actually have a focus on making it happen, because we see, I mean, from a banking perspective, there are many drivers for growth here. So it's not only about the risk side and translating risk. We see, for example, 3 major things driving growth in our domain, then not the financial assets, but actually being able to talk to us as retail bank customers and having a personalized journey on your digital platform, using the data that me as a customer puts there. That is a real value going forward. That's what digital banking is going to be about, creating these relevant user journeys. So that's a great driver for growth. Also, we see that the upcoming generations, the Gen Z and the millennials of this time, they are digital natives, and they will not use tools that doesn't present the fantastic user journeys that we can see on the neobanks and the challenger banks right now. So it's maybe some FOMO in this to actually also dare to move into this digital space, even though there is a product backlog and many IT systems to work with. And then the third is, of course, to promote your own product, a green product portfolio. So there's a lot of products that you have that you want to put in front of the end consumers. And that's also a great driver for growth. And there's a win-win-win here, of course. We see impact in individuals changing habits and patterns towards green products that you have, so increasing your business and also creating impact. So.
Let me try with an analogy for the standardization question. So we have basically the development of digital technology. You had there an approach that was driven by European bodies. That was ISO-OC. Nobody knows that anymore. They tried to do everything regulation first, a lot driven by the telcos, and very elaborate, very precise. And then there was the internet technology, TCP/IP, and that was basically bottom up, put it out on the market, solve problems as we go, and that created action and usage, and that, I think, is the way we need. We have such an urgency in this problem. We need this action first, doing things first, regulating as we go. I think that's a much better approach than trying to define the standards first and then go and never get it adopted and never do any action on the way, right? So that is really.
Although TCP/IP was a standard, just to mention.
No,
right?
but it wasn't. It was a very bottom-up developed. It was a very bottom-up, loose collection of protocols at the very beginning. So it was nothing at the beginning, and then it was adopted, and then they fixed things in a open process, fixed things on the go. And ISO-OC never went flying. Only old people like me know it.
Exactly. I was just saying. So ARPANET and what came from it, nobody knows that these days anymore. Maybe if you read it on Wikipedia. So. Final pitch, each of you, 30 seconds. Why should your clients trust in you and in the data that you provide?
Oh, well, they should trust in us because they can see it for themselves. So we're very transparent, so it's all out there, and you can see it and use it and compare our methodology with all the other existing there. And we can also have a talk, and we can tell you, guide you through that methodology and also our assumptions based on the consumption perspective. So
Tim.
Same here, openness, transparency, and enabling action. That is our pitch, and happy to talk to everyone, of course, as well.
Juergen.
Well, it's difficult now not to repeat the same, but I think it's very important to be very transparent on what you do, how you do it, where the data are coming from, what the purpose of using the data is, and not over-promising things. Just deliver on what you promised. I think that's the most important part.
Great, and finally, Matthias.
It's all said, but not by everyone yet, so I'm going to repeat it. So I think also our data is very accessible, transparent, and also comparable, and that's what makes the difference, in my opinion.
Great. So thanks very much for the panel. We will be around on the conference. If you want to speak to us, probably waiting outside a little bit for a while. Happy to answer any questions there, and thanks for listening to the discussion here. Thank you.